Hey guys, thanks for tuning in to PN News' The Conversation. On this show, we have Ryan Watkins from the crypto analytics firm Messari and talking about a range of topics on how he started his journey in investment banking, how a visit to Consensus opened his eyes to crypto, his current role at Messari, and what he thinks about the whole DeFi space. Stay tuned to the end of the conversation where Ryan explains the connection between Mansa Musa and this industry. If you enjoyed the conversation, feel free to follow us on Twitter at PNNewsOfficial. Check out our website at pnnewslab.com and our consulting arm at panoni.com. Links to these will be shown throughout the conversation. All right, in today's episode, in today's podcast, we are honored to have Ryan Watkins from Messari join us today. Hey, Ryan.
Hey, how's it going, Eric?
Pretty good. So for those who are listening or for those who might be watching as well, if you can kind of introduce yourself and also kind of talk about what Messari is and then your role at Messari.
Yeah, so I'll start with an introduction of myself. I'm a researcher at Messari, where I've been there for about 9 months. And at Messari, I basically cover stablecoins, DeFi, and then have like interest in governance and token economics as well. Before I joined Messari, I did investment banking for about a year and a half. And before that, I was in college where I studied finance and computer science. Just my background. As far as Messari is a data analytics and research firm. So we produce research. We provide data analytics tools. We provide intelligence products. We also provide a registry products, which is kind of similar to like an SEC Edgar type database where products will make voluntary disclosures.
Cool, awesome. Yeah, so I guess kind of going back to what you said about your major in college, both finance and computer science, which is basically two crossroads in the crypto and blockchain industry. So it fits pretty well. So I guess, how did you transition from investment banking into crypto? What was the story behind that like?
Yeah. So I guess probably in 2013 was probably the first time I came across Bitcoin, just from what I'd heard about it on the dark web. But those use cases didn't really interest me, but at the very least it did put on my radar. So, as the years went on and I would read about, Bitcoin and cryptocurrencies and, mainstream publications, but it just wasn't really covered well. So if they ever mentioned Bitcoin, it was usually in the context of being a scam or it being, used in darknet markets. So I just wasn't in a place where I didn't have any like strong like libertarian leanings, or I wasn't like a technologist. I just wasn't as intellectually curious at the time. So I never really had an excuse to get back in. So it wasn't until maybe 2016 when I'm on, campus and, I'm at the time I'm, very set on going into investment banking. And I started reading in the newspaper, people talking about this thing called blockchain technology. And it was supposed to be the future of finance and, Wall Street and different banks were getting excited about it. So I'm like, let me go check this thing out. And there's this kid on my campus who started a cryptocurrency club, who funny enough was working for, Ryan Selkis when he was at CoinDesk, who's the CEO of Messari. And he had some free tickets to go to Consensus in 2016. And he said, hey, if you help out with this hackathon the weekend before, you can come to Consensus for free. So that's what I did. I went to Consensus, literally had no idea what was going on, like didn't understand any of the stuff that was being talked about or built. I just saw that people were like really excited about this thing and people were comparing it to the internet. But even so in 2016, I just wasn't able to wrap my head around it. And what I later learned, actually, funny enough, was that 2016 was kind of the year of like blockchain, not like Bitcoin. And that's kind of the reason why I didn't get it, because I kind of thought of it as like an enterprise database technology, and I just wasn't quite sure what was interesting about that. So once again, pushed it to the side. And it wasn't until 2017 when, I'm interning in investment banking for my junior year of college. And I just see this headline come up when I'm at my internship that says Ethereum up 2,500%. And I'm just like, what in the world is Ethereum? and what is going on? Like, I thought the cryptocurrencies weren't supposed to be interesting. So that's really what it was. It really just was like the price action, like many people that got me interested in, just to start learning about it, start investing a little bit. And, first just really got interested in Bitcoin because, previously I had never really thought critically about, what money was or what its purpose was, or, I just assumed that it just always worked. This is something that is in the background, but so it was really thought provoking to actually explore those questions about money. And then I think what really got me to the point where I was no longer just interested in it from like an investment perspective, but actually thinking about a career was when I learned about Ethereum and kind of learned that this technology somehow even went beyond just money and could be a general purpose technology for constructing new forms of institutions, which is pretty fascinating to me. So at that point, I was a senior in college, and I had already had an offer to join an investment bank, and I still had not. I didn't quite understand like what the landscape was for cryptocurrency and what opportunities were out there. So I just kind of stayed on the path of banking, and over the course of that, first year of banking, just continued to recruit and meet people in the space, and then eventually you got put in touch with the guys at Messari and joined here about a year ago.
Nice. Yeah, I think going back to what you said about first seeing Ethereum shoot up like experiencing like 4-digit growth or something. I think most people,
Yeah.
I think it's been a double-edged sword, right? Seeing like these Bitcoin or crypto tokens just shoot up to the sky. It's been a great way to bring in people to the space, but also at the same time, I think it gives a false sense of kind of a false sense of um, inclination of what this industry is also about as well. But so yeah, as a research analyst right now, I mean, obviously on Twitter and even on Messari.io, the website itself, you've been able to, garner up a decent following. A lot of people appreciate and find your tweets about, different analysis and different types of insights and opinions very useful. And I think that's what this industry needs. So I guess, what would you say will be the difference between being a crypto analyst and being an IB analyst, or a financial analyst of some sort?
Yeah. So I think it's probably two things. I think one is actually it's really just one thing. I think it's just the difference between working in an organization and an industry where hierarchy is everything versus an industry where there is no hierarchy. And the way that actually, like what it actually means, like tangibly speaking, is that when I was in banking, I was under, multiple layers of people that's directing me to do certain things. So I wasn't really thinking as much, to be honest. And most of the work I was doing was just, following people's orders. And it's like a good learning experience, I guess, but it's just a different mindset when you go into cryptocurrency, and not only can I direct kind of where my work goes and how I do it and when I do it, but I also am responsible for taking ownership of what I write. So doing all the analysis. I'm really, it's more like a holistic, I'm like taking charge of what I'm doing. I think it's probably the biggest thing. And then I think another thing is that because no one really knows where this industry is going to go, people are more willing to and are more open-minded to younger voices in the industry and listening to what they have to say. So it provides a great opportunity for young people to come in and actually be able to be respected for some of the the thoughts and opinions they have. So I think those are probably the two biggest things. Just kind of like structurally about the industry that makes it different. And then probably the last one is that it's just very exciting, right? Like literally everything is changing every day. It's so fast moving. And you just constantly have to be, updating your views on the industry open-minded to evolution.
Mm. Yeah, I can agree with that. I think most people can echo the same opinion of that. Working in this industry, for the most part, you're wearing multiple hats in any position, and there's a lot of flexibility and a lot of liberty as to what you can do and how you can do it and whatnot. So yeah, I can 100% agree with your opinion on that. And then also kind of going back to the whole similarities between being a crypto analyst and financial analyst as well. I think even if you see, with, for example, you and your team at Messari, and then also some other guys, there's a lot of financial concepts that the finance guys bring into crypto, such as kind of carving out like their own valuation frameworks, for example, and kind of digging deeper into token economic models and stuff like that. So I think that's also been a great way to kind of lure in, your typical traditional equity research analyst, for example, and then bringing them into crypto to kind of use that kind of similarities in terms of how to view a certain token. Even though tokens and equities or bonds, they're totally different, but I think the um, uh, underlying fundamentals of valuing something based on fundamentals is pretty important in this space. So yeah, since you do cover the DeFi space and you've been an awesome voice in the DeFi space, in general, what are your overall opinions about what's going on? And then kind of if you kind of talk about your recent piece about the current kind of bloodshed we've seen amongst DeFi tokens within the past, I guess, since September 9th or 10th.
Yeah. Yes, I mean the past really since the beginning of September, it's just been an absolute bloodbath for DeFi tokens with like many down 40, 50, 60, 70% from their peaks reached to start the month. So it's definitely been one of the ways that I like to frame it is if you look at 2017, and granted, I got into 2017 bull market as a noob, and it was like August when I first started investing. But when I look at the data from 2017, and I look at how the price of Ether, which in my opinion led the bull market in 2017, like how that performed. Over the course of 2017 and 2018, before Ethereum reached its peak, there were 7 pullbacks of 20% or greater for Ether, 5 of which were actually greater than 40%. And now, the takeaway there is not necessarily that this bull market will be exactly the same, but it is just to provide some context that basically shows you that, bull markets don't always just go up in a straight line, and just because we do have a pretty nasty pullback doesn't mean that the trend is over and the quote unquote the bubble has popped. So I think that's probably the context. And then as far as the price action, who knows, right? It's just more people selling than buying. But I think a couple of things come to mind. One is we just had an absolutely blowout summer where prices just went parabolic, and pretty much they did so uninterrupted. Like there wasn't really any major pullbacks for the entirety of summer. And then we got to September and we start getting quite a bit more volatility in broader financial markets at the same time, while we were quite a bit overextended, and we also start to see pretty risky activities popping up, right? Like more like yield farming, like flash yield farm opportunities for like food coins, and it just kind of felt like things were just getting out of hand. So it's just people taking profits, going, given kind of the the things I listed. But I don't think it's the end of DeFi if that's what people are thinking.
Yeah. So from this summer, out of the more newer DeFi projects that came out this summer, which one of them do you think would have the best sustainability going forwards, maybe a year or 2 years from now?
So of the ones that emerged in the summer?
Yes.
So I guess if the question is around kind of these fair launched tokens, I guess, then I mean, it has to be Yearn, right? I mean, Yeah, I think what's interesting about Yearn is a couple of things. I think one, and I guess maybe just some background on what like Yearn is. It's a yield aggregation protocol that launched a token in July, and basically in 6 weeks the token went from being worth zero to being worth about like $42,000 that it's about in about like 6 weeks, which basically valued the protocol as a whole at well over $1 billion. So it was probably the fastest unicorn ever in cryptocurrency. I mean, maybe like just ever, generally speaking. So it caused quite a bit of excitement in the industry. And essentially, what it does is uh, it allows people to deposit assets onto the Yearn protocol, and then Yearn basically takes those assets and tries to get you the highest yield possible on those assets. So, one thing that trend that emerged this summer was this trend of liquidity mining, where different protocols would start distributing new tokens to people who provided capital to the network. And the reason why protocols do that is one, to distribute ownership of the token in an effort to decentralize. And then two, to incentivize people to provide liquidity to the protocol. So it's a bootstrapping mechanism. Now, what that has created is these opportunities where if you provide liquidity to one of these protocols, the yield you get in that token can be very high. So like protocols have distributed billions of dollars to liquidity providers through these like liquidity mining schemes, right? Essentially what Yearn does, it says, you know what, there's so many different liquidity mining programs out there, to the point where they're getting increasingly complex to evaluate and to decide which ones you want to go into and what risk you're taking. What if you just give your assets to us and we go and allocate it across these yield farming opportunities for you? So essentially what it's doing is it's kind of like a decentralized hedge fund that takes in assets and then goes and allocates it as efficiently as possible across DeFi to get you the best like risk-adjusted yields. So that's Yearn. And the reason why I think it's the most sustainable, without getting too detailed, is it really addresses a very compelling use case for people looking to get into cryptocurrency, which is basically just how can you help me make money? All right, and essentially what it does is just it gives people an option to rather than having to go and evaluate all these different DeFi protocols and take a ton of risk and go into different yield farm activities and put a lot of thought into all this. You just can simply just put your money into this like centralized hedge fund, and it just makes money for you, right? So I think that's a very interesting use case, and they've quite a bit of exciting developments on their roadmap, and they're led by pretty talented developer named Andre, who you should follow on Twitter and see some of the things he's up to that make it pretty exciting.
Yeah. I think another way to put kind of to describe Yearn is Yearn would be like the Expedia to yield farming. Or even to your analogy, I think even the better term for it might be Yearn being like the hedge fund of funds. But yeah, it's yeah. I mean, you've covered this project for quite some time over the past summer, and yeah, I think for the most part, like what you said near the end, that developer Andre himself has a pretty strong reputation, and I think he has enough kind of power in himself in terms of developer skills and also within his network to continue that project going forward. So yeah, I think you're right on that. To kind of deviate a little bit from DeFi. So for CeFi, right? I know at Messari's mainnet online event, you had a little piece where you summarized the whole CeFi space. And as we saw near the kind of like near the end, or maybe the end of the first DeFi bull market, we've seen a lot of different CeFi players come into the space and kind of carve out their own DeFi ecosystem. For example, with Binance, Huobi, OKX, they have also, all three of these main exchanges, traditionally centralized exchanges, have kind of carved out their own yield farming type of platform on their main platform. Or even they've even gone to the point where they've raised like their own incubation fund for DeFi. So with that said, where do you see kind of the other CeFi players kind of carving out, if they were to carve out, how would they kind of go about this whole DeFi craze? Do you think it's going to incentivize to kind of deviate away from what they've been doing in the past? Or do you think they're just going to kind of stick to what they've been doing and then, improve upon that and then get better at that?
Yeah, no, I think one thing that's definitely changed between last bull market and this one is that whereas last bull market, it was just all about listing different ERC20 tokens that people wanted to trade. It was pretty simple. This one now, these exchanges have to compete with all these DeFi protocols on Ethereum because it's no longer just about like trading, tokens with a white paper.
Mm.
It's also about, I think one, trading like newly listed tokens that were like fairly launched, right? And like you have to compete with like the Uniswaps of the world who can just list these assets quicker. And then two, actually providing people the opportunity to use some of these DeFi protocols because you can also make money from using those as well, right? So providing people access to like Compound and Aave and Synthetics and all these different protocols is also something that this is pretty interesting as well. And I think one thing that we've seen that you've kind of pointed out is that many exchanges are kind of leaning into DeFi and kind of becoming like almost in a sense like front end interfaces for DeFi. So you can go to like OKX and take out like a loan on Compound, for example, using OKX, right? Which is pretty interesting, right? So they're providing like a window for you to access DeFi pretty easily.
Mm.
So yeah, so I think that's probably the biggest difference. And then another thing I think we've seen recently is, and I think Binance is a good example of this, like they see all the activity happening on Ethereum. They basically forked Ethereum and created this thing called Binance Smart Chain. And essentially what it is, it's like an Ethereum clone. And they're now launching all these different protocols on top of it. And there's also the opportunity to yield farm with some of these different assets on Binance Smart Chain, just kind of like to replicate the hype that we see on Ethereum as well. So yeah, there's quite a bit of different ways that exchanges are approaching this DeFi craze and looking to get there, get involved.
Yeah, I think what's kind of similar to Sexes getting into Dexes or CeFi getting into DeFi is kind of similar to what we've been seeing over the past maybe decade of traditional banks getting into fintech. And then so what would be cool going forward would be to see traditional banks getting into DeFi of some sort. Because I mean, right now, traditional banks, for the most part, they kind of steered away from crypto in general. But, as you've seen in the past few years, a lot of traditional banks have been slowly stepping their toes into crypto. So yeah. And then, so yeah, to kind of go to another topic that you also kind of cover as well, besides DeFi, stablecoins. A few days ago, the OCC came out with a letter or some type of guidance saying that they're going to start allowing U.S. banks to provide banking services to stablecoin issuers. The way that I've been kind of thinking about this is that I think there's a few different forces and a few different plays that they're trying to make, right? I think one is getting more comfortable with the whole idea of stablecoins and crypto, right? Which is good, right? It's, I think, on face value, it kind of shows more adoption in the space, right? For whatever that means. And then on the second hand, right, I think one could also look at that and say to yourself that is the OCC being more playful towards stablecoin issuers is for the fact that They kind of want to reverse the narrative of stablecoins taking down the U.S. dollar dominance. Because I mean, if you think about it, right, a lot of stablecoins, most of the stablecoins, the big ones right now, they're all U.S. dollar-backed stablecoins, right? USDT, USDC, and whatnot. And a lot of people kind of have pushed the narrative of, oh, these stablecoins, they're challenging the U.S. dollar dominance, right? But if you think about it, right, most of these stablecoin issuers, well, for one, they're US dollar denominated. And for two, most of them already have their reserves parked in US banks. So the question to you is, do you think this OCC decision or this new guidance is kind of a way for them to have more control over the US dollar circulation amongst, international payments and whatnot? Because yeah, just wanted to get your thoughts on that. And yep.
Yeah, so I think a lot of the recent OCC activity we've been seeing is really just a product of Brian Brooks, who was a former Coinbase executive and is basically directing the OCC in a more like crypto-friendly direction. I think that's really what that is. As far as the question about U.S. dollar dominance and whether this is a play for control. I'm not quite sure about the control aspect by allowing U.S. banks to basically custody the deposits or the reserves for stablecoins. As far as like U.S. dollar dominance, I think that stablecoins amplify U.S. dollar dominance by porting them across the world. Like one of the great things for U.S. dollar when it's on a blockchain, like say like USDT or USDC, name your favorite stablecoin, is that it allows the US dollar to be distributed and transferred and held virtually anywhere in the world where you have an internet connection, which is pretty compelling because it just lowers the barriers for people to get access to a stable currency. And while there's many different projects in DeFi that have gotten a lot of attention over the past few months, for good reason. Like I really do think what's going on in DeFi is very fascinating and in the long run will be very worthwhile. But I think one of the most important use cases for cryptocurrencies today is just the simplest one, which is stablecoins. It's just allowing people to have access to a stable form of currency wherever they are in the world. I think is very important. It's very simple. It's like less, I guess, sexy in a sense because there's no like crazy liquidity mine rewards or crazy token economics or anything like that. But it really does provide real world value to people, and I think it's exciting.
Yeah, I think you're right about that. For the most part, stablecoins are just your vanilla, simple kind of crypto tokens being moved left and right. So yeah, nothing as sexy as seeing like 1,000% APY on some yield farming platform.
Yeah, for sure.
Okay, so to kind of wrap it up, a few other questions that I kind of wanted to shoot towards you. One of them being kind of Messari in general, right? Messari, they provide themselves as like a crypto analytics platform. Where do you see that kind of space kind of forming into? Because I mean, right now, for the most part, there really is no one main crypto analytics provider that's dominating the market, right? So, for example, if you compare it to the financial markets, I think everyone can just think of one name, Bloomberg, right? Those Bloomberg terminals, right? That's kind of like the main financial analytics platform that most offices use. And I think even to this day, it's actually starting to fade away more and more. Due to its cost and actual physical size. So I guess for you, I mean, what do you think how this kind of niche sector is going to be playing out going forwards? And there's a lot of good providers such as Messari for one, and then there's also Glassnode, there is Skew, there is ByteTree. So yeah, I guess your opinions in general.
Yeah, so I think the data analytics space is definitely very young, and there are data analytic firms that provide that aggregate a bunch of data from different sources, similar to Messari. And there's also specialist data analytics providers like the DeFi pulses of the world that just focus on doing one thing, right? So for DeFi pulse, it's just showing you the total value locked in, all these different DeFi protocols. So I think for the foreseeable future, it will probably remain fragmented with specialist data providers. I think longer term, it's definitely a space that's ripe for a consolidation, 100%. There's just so many different data providers doing the same thing. And I think anyone that's providing access to on-chain data is essentially providing a relatively commoditized service. Like everyone has access to a blockchain and can get access to that data. So I'd be very surprised if in the long term there's just like hundreds of different firms just doing the same thing. So yeah, I think in the long run it probably ends up being kind of like aggregation platforms that pipe in data from a bunch of different sources, and hopefully can package that into a very nice UX or UI, and just give you the full suite of tools and insights into any blockchain network you want to see. But quite a bit of work needs to be done on that front.
Does Messari have any plans for like a crypto analytics or a Messari app in general?
Yeah, so we do have an app right now,
Okay.
which we can download. And then, yeah, I mean, as far as like, do we have anything in store? I'd say stay tuned.
Okay, awesome. So yeah, last two questions. One of them being is that I recently saw on your Twitter that you posted or you created your first NFT on Rarible. So is that an image that you created yourself or?
Yeah. So it's funny. For whatever reason, I just was thinking about Mansa Musa, who's this historical figure from the 14th century. Is known as like the richest person ever lived. He was basically an African emperor, and he was known for his immense wealth that he held in gold. And there was this specific image of him that was on a map, like a 14th century map, of him sitting on a throne and holding this like gold coin and staring at it. And I just thought like, how cool would that be if I had to swap the gold coin out for Bitcoin. And so that's essentially what I did. I took that, that very old image from that map, put the Bitcoin there, and then did quite a bit in the background, changing it, like making a little bit like a matrix background, and then also changing some of the text that's on the page to incorporate a quote from Satoshi Nakamoto about mismanagement of money. And I thought it was pretty interesting. I called it like, money is a flat circle, and it's really funny because like we're still doing the same things now as we were back in the 14th century, and it's kind of like now like everyone in this industry is fascinated by this kind of Bitcoin, just like Mansa Musa was fascinated by gold, this kind of like non-sovereign store of value. So I called it "Money is a flat circle" because of the idea that it's just the story we're continuing to tell over and over again.
This guy's name was Mitsu.
Yeah, Mansa Musa.
Okay. I'll have to look him up sometime. And then how much did you post that NFT for sale, if you did?
I think I just created like 10. I posted them for like $50 each.
Okay. Nice. All right. Well, if I come across that, I'll maybe think about purchasing it. It depends.
Yeah, no, dude, it's just like a cool little experiment. I think one of the things that has been helpful for me, just like in understanding everything that's going on in the space, is just using all these different projects that are out there. So one of the best ways to learn how Compound works, for example, is to go and start borrowing and lending assets on Compound. Or one of the best ways to learn how Uniswap works is just to go and like exchange some assets on Uniswap. So yeah, I just wanted to get some experience, actually turning this kind of abstract concept of NFTs and NFT marketplaces into something tangible that I've actually done. So that was kind of all it was. But yeah, it's pretty fun experiment.
Well, I think if Ethereum's gas fees continues to keep rising, I think experimenting and playing around with these platforms might get harder and harder. So
yeah, for sure. I mean, well, maybe that's why this pullback is great. I mean, I just did a swap today on Uniswap, and it cost me $3. So it's significant.
It's cheap.
I mean, it was like cheap relative to where it was, but definitely not cheap compared to where it was like 6 months ago when you could do a swap for like cents.
Exactly. Okay. Last question. Besides DeFi and NFTs, what are you most excited about in this space going forwards, maybe a year from now? It could be, anything related to crypto, blockchain. Besides DeFi and NFTs.
One interesting, and this maybe is just a specific project, but I don't know if you've ever heard about Helium.
Okay.
It's a Web 3.0 project that's focused on building a decentralized wireless network. And it's pretty interesting because one, the community doesn't quite overlap with cryptocurrency. It's more so like IoT hobbyists and like that don't quite overlap with cryptocurrencies. And essentially, what makes it interesting is that there's something like the way the network is built. Like essentially, individuals can purchase the infrastructure to run this decentralized wireless network, and then start like servicing different IoT devices. So it's pretty cool is that like there's like a physical manifestation of this decentralized network that is providing like real world value to different IoT devices. And I think what's pretty exciting about that is like one, it's kind of cool to see like the blockchain world integrate with the physical world. And two, it's like it's kind of this really cool use case that you can actually explain to people outside this industry because there's actually something tangible you can go out and touch. Like, yeah, like you're running decentralized wireless infrastructure like from your home. So I think that's a pretty exciting use case and one that is probably not talked about as much as the different things happening in DeFi and Bitcoin and all that.
Yeah. I mean, I'm pretty sure it's a lot easier to explain Helium or the project itself versus explaining Sushi Swap, right? So
yeah, for sure. Well, the Sushi Drop drama was actually one of the more entertaining stories to tell people because it's just so dramatic.
Agreed. Yeah, it's almost like a movie.
It was.
Okay. All right. Well, cool. Yeah. Thanks. So yeah, that wraps it up for today's podcast. Thanks again for coming on the show today. And then hopefully down the line, we'll see if we can get you on the podcast again.
Yeah, of course. Thanks for having me.
Yep. Okay. Well, yeah. Signing off. Okay.